Okay. And the next thing is, before we even proceed with setting up of the book, we should do this asset category, asset location, asset key flexibility, which you've already seen. And next thing is setting up of something called asset physical years. So all these things are actually now what are the steps which I'll be showing now? Asset physical years, and then I'll be showing something called your depreciation rate, depreciation methods, pro rate conventions. All these things are the prerequisites before I proceed with the setting up of the book, corporate book or a tax book. Okay. The first thing is physical years, set up system physical years. That's the navigation. So I have already created one physical year. I'll explain you what is this physical year. Okay. So we have already defined a calendar in GL. If you remember, for our Reliance INR ledger, our calendar is 1st of April 2017 to 31st of March 2018. So we are following April to March calendar. So in fixed assets also, ideally, if you are actually matching this to your fixed assets to your general ledger, you should use the same fiscal year. If you use a different fiscal year, there could be some practical challenges. Okay, but from a system perspective, we need to again create that particular fiscal year. Even though we have got that particular calendar year in GL, we need to again create that particular fiscal year in fixed assets. So whatever I had given here is 1st of April 2017 to 31st of March 2018 is my fiscal year 2018. 1st of April 2018 to 31st March 2019 is 2019, and so on. Okay, if you want, you can create future years also. So for the time being, I just created only 3 years. So that's the fiscal year. Again, this particular fiscal year will be selected during the creation of the corporate book or a tax book. Okay, that's the first step, fiscal year. And the next step is calendar. So I had already created a calendar, Reliance FA calendar, that's the name. So F11. Okay. So as far as the calendar is concerned, so earlier we have defined the physical year. So we just mentioned that 1st of April 2017 to 31st of March 2018 is my physical year. Okay. Now as far as these calendars are concerned, you give your calendar name and you select the fiscal year whatever you have created earlier. Under that particular fiscal year, what is my periods per year? Obviously 12, and then you need to specify the periods. Again, even though you have created the calendars in GL, you need to again specify the same calendar even in fixed assets. So 1st of April to 2017 to 30th of March is my April period, May, June, July, and so on. So I have created the calendar for 1 year. Again, this particular calendar is also selected when I am creating the book.
Arvind, one question, like your depreciation can it be calculated quarterly basis, something like that, instead of doing a monthly or something?
Yes, it is possible, but most of the clients, 90% of the clients, they actually go by period. The reason being, most of the clients actually do a month-end reporting. Okay, if you do not have any kind of a month-end reporting concept, you generally do a reporting only once in a quarter. Yes, you can go with that particular option, but most of the clients will go for the, if you go with that particular quarter end depreciation calculation, then your periods can be different here. Okay, but most of the clients will go for your month-end reporting, and if you are going for month-end reporting, you want to system to calculate depreciation on a monthly basis, and if you want system to calculate depreciation on a monthly basis, you need to have your periods defined in this particular screen per month.
So you mean to say that if it is the GL reporting is a monthly basis, it should be in sync with respective to the GL in FA.
Exactly. Yes.
Okay.
Okay. So now we have completed the defining of the fiscal years, which is a fiscal year and calendar, and now we can proceed with the defining of the corporate book and tax book. Okay, so first thing is we'll define the corporate book, set up asset system, book controls, that's this navigation, set up asset system, book control. Okay, I have already created the corporate book. Okay, I will show you corporate book and then we'll get into the Reliance tax book. Tax book we will do it now. I did not create this tax book. I have created only the corporate book. So first we'll see the corporate book. So just press the down arrow and then start creating your details. Okay. So this is my book name, my FA book name, and here you have got class, corporate, tax, and budget. As I mentioned that there are three kind of FA books. One is a corporate book, tax book, and budget book. So we are creating a corporate book. So the naming convention should be Reliance Corp, and class should be corporate because this is a corporate book. And this is the description: Reliance Corporate Asset Book. And associated corporate book, these do not have any significance as far as the corporate book is concerned. I'll explain you the significance of this particular field when we are discussing about the tax book. Okay, leave that for the time being. Ledger name, what is my GL ledger name? Okay, for the Reliance Corp, this is my FA. So Niranjan, this is what I was saying, that there are two places wherein you specify your GL data access set. One is the profile option and other one is this is the screen wherein you associate your GL ledger to your FA book. And there is a checkbox called allow GL posting. So this is a checkbox which drives or which explains to the system that all the transactions whatever is created in the corporate book should go to this particular GL book, and this particular checkbox will be disabled for tax books, because as I mentioned that you do not want to duplicate the data whatever you are sending from your corporate book will should go to the GL, but there should not be any transfer of the data from your tax book to GL. So for the tax book this particular checkbox will be disabled. Okay. And depreciation calendar, whatever we have selected the calendar, whatever the calendar whatever we have created earlier is what is the depreciation calendar I have selected here. Fiscal year is also whatever the fiscal year whatever we have created, I picked up that particular fiscal year. Prorate calendar, I'll come to that particular point in a while, give me a minute. And what is the current period, what is the first period from which you want to start using this particular fixed assets module. So I mentioned October 2017, and all other things are what you call default. Divide depreciation, so always you go for divide depreciation as evenly. So that means in a month, okay, there could be 30 days in a month, there could be 31 days, in some days it could be 28 days or something like that. If you say divide depreciation by days, the depreciation calculation amount will be different per month. In a month which has got a 30 days, you will have some amount. In a month which has got 31 days, the depreciation amount will be different. So if you say divide depreciation as evenly for all the months in a year, your depreciation amount will be constant. So if it is $100 depreciation per month, in June it will be $100, July $100, August $100, September also $100. But if you go by divide by days, in June if it is $100, for July it could be July which has got 31 days, it could be say 105. August also 105. September it could be 100 because September has got 30 days. Okay. Again, there are very few clients I have seen who go divide depreciation by days, but generally most of the clients will go divide depreciation evenly. And as far as the second tab is concerned, accounting rules. So accounting rules, under accounting rules, there are two things: allow mass changes and allow amortized changes. So when you want to do a changes to lot of assets in this particular book on a mass way, when I say allow mass changes, it could be mass retirement, mass revaluations, mass location transfer, something like that. That is in a single screen. There is something called mass retirement, mass location transfer, and mass asset category change screen. So through a single screen, you should be able to make the changes in a mass way. That is, in a single screen, you will be able to do those changes for a lot of assets. If you want that particular functionality to be enabled for the asset, you need to check this particular allow mass changes checkbox. And also, if you want to use a revaluation concept in FA, you need to check this particular checkbox. And there is also something called group depreciation concept. If you want to use a group depreciation concept, you need to check this checkbox. If you do not want to use a group depreciation, do not check this checkbox. I'll not get into the details of the group depreciation, but I'll explain you at a high level what is group depreciation, or group depreciation and group asset concept. So generally whenever you create an asset, you select the asset book name, asset category, and also you select your asset location and asset key flexible. Okay, So there is, say, take an example, asset 1, and the book is Reliance Corp, and asset categories, take an example, computer and software, and it is 100,000. Okay, and depreciation on this asset is maybe, say, example, say 10,000 for that year. Take an example, there is another asset, asset number 2, corporate book is Reliance corporate book, and asset category is same, computer software with, say, 200,000, and depreciation is 20,000. Take an example, there is third asset, and now corporate book is Reliance corporate, and asset categories computer hardware. 300,000 is the asset, and depreciation amount is, say, 30,000. Okay. If you are not using a group asset concept, so generally you will have these details, like for each asset you can see the asset cost as well as the corresponding depreciation amount. But if you use something called group asset concept, it is just from a reporting perspective. You create an asset by name group asset. Okay, and for this particular group asset, you give the name as, say, group asset 1. Okay, as far as the group asset is concerned, your cost is 0, depreciation is also 0 at an initial level. And then when you are creating these particular assets, okay, when we get into the asset data entry screen, I'll show you that there is a field called group asset, and under that particular group asset you can select what is the group to which this particular asset belong to. This asset 1 asset number belongs to the group of GRP1. Similarly, for asset 2, you can specify under group asset, it belongs to group asset 2. Similarly, for asset 3, you can say that it belongs to group asset of group asset 1. And once you save this, what will happen is, once you do this kind of an association at a group asset level, you will be able to see the cost and depreciation. Okay, so that means when you run some reports for a group asset 1, you will be able to see the cost of all the assets under this particular group asset is 600,000. The depreciation of all the assets under this group is 60,000. And there are some additional functionalities that, like, whenever you retire this particular group asset, all this asset gets retired. Whenever you run a whenever you do a reporting of this particular group asset, you will be able to see the other details. And one other advantage is retiring of the group asset. Once you retire the group asset, all these assets will get retired. And other one is the, what do you call, reporting purpose. So some countries will ask for this particular group asset concept. In India also, as per your Indian Income Tax Act, we have got a similar thing, but it is not called a group asset. It is called something called block of assets in India. So block of assets is actually, if you want to match the exact block of asset, you need to go for India localization. That is the one way. And other way is, to certain extent, with some limitations, I'll not get into those details, but with to certain extent and with some limitations, you can implement your India block of assets concept using your group asset functionality. So even in India also, we have got something called a block of assets. In the block of assets, what they are saying is, this is my block. Okay, and under this particular block, I want to categorize, or I want to group all my corresponding assets. So I'll have multiple blocks or multiple groups. Okay, this is one example, and there is another, there could be another block, or there could be another group wherein I may have few more assets, something like asset number 4, asset number 5, and in this case it could be furniture and fixtures, furniture, and could be something else. So my group asset would be, this is my group asset. $400,000. Okay, so as far as this particular block is concerned, this is the cost 900,000 and this is the depreciation. Okay, so that's about the group assets functionality, which is equivalent to block of assets in India. And if you want to use that particular functionality, you need to check this particular checkbox. And next thing is natural accounts. So what exactly the system needs to use the different accounts whenever it is doing a selling, whenever it is retiring, whenever it is depreciation.
I mean, can you explain on revaluation?
Sorry.
Revaluation.
Okay. So revaluation is basically, you would have seen the revaluation functionality in GL. In fixed assets also we have got a concept of revaluation. So revaluation is basically revaluing the value of an assets, taking into consideration your market situations. Okay. So in your current example, so take this as this asset as an example, maybe asset number 1. Okay. You use this as asset for 1 year, and for 1 year your depreciation is 10,000. This is your cost of asset and this is your depreciation, and your net book value. Net book value is nothing but your cost of the asset minus depreciation. Okay, your cost of the asset minus depreciation is nothing but your net book value, or that is the value of your asset is 90,000. Okay, next year again you depreciate by 10,000. So at the end of the second year, your net book value will be 80,000. Okay, this is an asset whose book value is 80,000. But in the market, if you want to sell, or if you want to see what exactly is the value of this particular asset in the market, it is not 80,000. This is, remember, this is a computer software. Okay, you know that software becomes redundant very easily in the market. Okay, so if you try to check the value of this particular asset in the market, it is not really 80,000. It is worth only say 40,000. Okay, so that means the value of this particular asset has been reduced by more than roughly 50% in the market. So that's where you use the revaluation functionality. During using a revaluation functionality, you enter something called revaluation percentage of 50%. Then automatically your value of asset moves from 80,000 to 40,000, and then system will start calculating the depreciation on 40,000 instead of 80,000. That is revaluing the asset. Again, what kind of assets needs to be revalued, under what circumstances? It is a business decision, because law says that these are the kind of an assets which you need to revalue using so and so procedure. Now, how do you arrive at a value of say 40,000? You need not break your head. This is the business decision. They will come up this particular value, says that these are the assets which we need to do a revaluation. And if they say that you want to do a revaluation, then you need to use this revaluation functionality. Okay.
Okay, so the point is, if you revalue, the revaluation of once that revaluation is done, the depreciation amounts will get varied from that period onwards, or it will be readjusted to the initial records also.
Okay, so if you want to get, yeah, so there are again so many different calculations there, or whether you want to amortize that revaluation adjustment, or whether you want to keep that revaluation reserve or something like that. But at a high level, system will do a start recalculation on 40,000 only from the particular month. There are so many profile options, there are so many checkboxes. If I try to explain all those things, I think you'll get confused. I know, like, because fixed assets is not directly easy when compared to your AP and AR. There are so many concepts like amortization, revaluation reserve, impairment. If I try to explain all those things, then you will get confused. Okay.
Okay.
Okay. So whatever the accounts which we mentioned are the default accounts. So couple of when I do a data entry, I'll explain you the accounting entry. So when I'm explaining the accounting entries, I'll also explain you the source. So some of the accounts are picked up from this particular source, and some of the accounts will be picked up from the asset category, which we are going to see in a while. Okay. For the time being, don't concentrate on what exactly is the account numbers which you have mentioned here, but these are the default accounts which are used in different places.
Arvind, just one question. So
Yeah.
why did we just give the natural account only there and not the complete combination?
Okay. The reason for that is, based on the default asset account generator. Okay, here you can see account generator defaults. Okay, all other segments will be picked up from here except the national account. National account will be this value. Okay, if you are using the standard what do you call fixed asset generator, so the system is going to pick up all other segments from here, and this particular value will be appropriately defaulted. I mean, like, so if it is a proceeds of sale, then your total account code combination will be 01 hyphen 000 hyphen 7850 and then other send. But if you really do not want to use this particular default values, then you need to go for the customization of your SLA, which we have done even in our current client based on some requirements. Okay.
Okay.
So that's the book controls.